How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as of today, that account is sitting at $75,453.23, up by $202.62 from my last video. However, still down from my all-time highs just a couple of weeks ago. So in today's video, I want to get into the month of September because it is notorious for being the worst performing month when it comes to the stock market, and moreover, jump into what I'm personally going to be doing in the next week to 2 weeks and well into October. A video you will certainly not want to miss out on, so make sure you watch it through and through. Now, just before we dive in, as always, make sure you go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Most importantly, if you personally have not already subscribed, make sure you go ahead, tap on that subscribe button while you're at it. I not only want each and every one of you along for the ride with me, but want every single one of you taking advantage of the $50 One Hope Wines gift card giveaway I have underway as we speak, in which one lucky winner, the moment this channel crosses that 1,000 subscriber mark, will be selected and sent that gift card to pick out the wine of your choice. So cheers to that. Now, YouTube, with all of that out of the way, let's go ahead and dive right in. So if you've been following along in the Blue Lion Finance journey thus far, you'll have realized that from video to video, I have been kicking us off with this macro level overview of what exactly has been happening in the stock market, as I am a believer that if we are taking a look at what is going on, at least at this macro level, we are all going to be able to make better investment decisions for our own personal portfolios. And of course, that payoff is going to be greater in terms of the returns that we are getting back as long-term investors come the next 2, 3, 5, 10 years out, which is exactly what I am at least aiming for. So with that being said, this video is going to be no different. We're going to add some icing onto the cake here, because from video to video, I've been talking about the Delta cases that have been on the rise. We've been talking about global economic stagnation, and then of course the Federal Reserve's monetary policy come the end of 2021 and into 2022. Hint, they're going to be taking conservative approaches. However, they are willing to pivot in any which direction in order to ensure that we do not falter, which is good but also alarming, because now we are taking a look at these inflationary rates that are certainly going up, which all leads me to now that icing on the cake during the month of September. As mentioned, it is historically the worst performing month when it comes to the stock market. And no, I am not just making that up to spook you even more. I am sharing that because since the 1950s, there has been strong data showing us that September is the worst performing month across the board for all investors. Just taking a look at the three leading indexes from the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, they have all performed at their poorest during the month of September. The Dow Jones on average declining by 0.8%, the S&P 500 declining on average by 0.5%, and since 1971 with the establishment of the NASDAQ, it has fallen by 0.5% on average during the month of September, which leads me to question, why exactly does that happen? And most importantly, what am I personally going to be doing come the next week or 2 weeks to conclude September and roll into October? So before I go any further, I want to talk about this anomaly that begins during the month of September. It's actually supposed to really begin on September 17th and continue on through October. It is known as the September effect. And while there really is no clear-cut answers as to why this effect happens, there's certainly speculation amongst the analysts, which we're going to get into in a second. But as an investor, it's important for you to understand that there is no escaping the September effect. It is not specific to US markets and the US stocks. It is going to impact the worldwide markets. So again, you cannot really escape this one. There's no running to your JD.coms, Alibabas, and Neos of the world. You will most likely be impacted. So just kick back, relax, and let this whole storm pass us by. As long as you have a strategy in place, you should be all right. Now, with that said, let's get into why analysts believe the September effect actually occurs. Now, most analysts think that there's a seasonal behavioral change which happens come the end of summer and heading into the fall season. We have many investors who are returning perhaps from vacation. They're taking a look at their portfolios and they're cashing in on their earnings. Now, that may just be the case, but then we also have analysts out there saying that the September effect is actually largely due part from mutual fund managers selling out of their worst performing positions, which is known as a process called tax loss harvesting. And essentially, in my opinion, it's almost like these mutual fund managers are deceiving those who invest in their funds by just getting rid of their worst performing positions before the closeout of the end of the year, and they have to show everybody their performance. Now, either which way, I don't necessarily believe that understanding the why when it comes to the September effect is as important as the what exactly we should all be doing about it, part of the equation. And so in order to understand what I personally am going to be doing, you got to understand my thought process. Now, in the next coming week or 2-3 weeks, I do certainly foresee a correction, and I mean a colossal correction that is well on its way and may very well be closer than we all think. Now, check this out. During the course of the last 12 months, we've had 51 all-time highs when it comes to the stock market. And after each of those all-time highs, we've had pullbacks, but none of them sunk more than 5%, which means that we are due for a massive correction. So what exactly now am I personally strategizing for is that very correction with a stockpile of cash put aside, so when that 5% plus correction hits, I can fire away in buying a ton of stocks on sale. And I'm not talking about just any stocks, I'm talking about the highest of quality stock opportunities to get invested in. Because yes, I'm a long-term investor that wants to buy into positions, be a part of this business, and just own it for the long run, collecting on solid dividends and amazing growth. So I have a stockpile of cash that I have put aside, waiting for that correction, and I will be dollar cost averaging my way into perhaps broad market indexes. Say VTI is a fantastic index, VTSAX is another one, and last but not least, we have VOO. Those are the three indexes that I'll most likely be focusing on and dollar cost averaging my way into these positions, because really it's better to have time in the market than trying to time the market itself. And at the end of the day, who are we really kidding here? No one can actually outbeat an index fund year over year, so why not just scoop up an index at a fantastic price? Now, when the market actually dips down more than 5%, I'm going to be focusing in on a handful of companies, that being Apple, Realty Income, Johnson & Johnson, Medtronic, and Tesla. And I'm going to really be doubling down on Apple if I'm able to scoop it up at a fantastic price. Apple is my never sell company in which I'm only ever buying more and more shares of it. I did in fact buy more shares just this week of Apple given the Apple announcement. Really, every time they have a new iPhone and they announce it, what happens is a buy the rumor, sell the news type of deal. And we're gonna see Apple stock most likely surge within the next 60 to 90 days. You keep your eyes on Apple stock, at least that is what I'm doing. So I bought 3 shares of Apple this week, buying 2 of those shares on Monday for $149.21. And then I bought another share just after the announcement for $147.26, bringing my grand total spent on Apple this week to $445.68. I currently hold 76 total shares worth of Apple, but have a goal of getting that share count up to 100 shares worth of Apple come the end of the year. So make sure you stay tuned for that share count, as I will be reporting each and every buy to all of you on the Blue Lion Finance channel. Of course, just before we actually close out, I would love to know your personal strategy here for the September effect and rolling into October. Drop comments below. Of course, if you've liked what you heard, you learned something new, understand that I am not a financial advisor, so do your own due diligence prior to just investing in anything I share on the Blue Lion Finance channel. But as always, go ahead, tap on that thumbs up button because it helps me out in growing this channel. And most importantly, join me on this journey by tapping subscribe. Now YouTube, until the next video, I will see you all there.